So is it time then to get really nervous? Let's ask Peter McGuire. He's the CEO at XM Australia. He joins us from our Sydney studio. Peter, we're just getting some lines through from the U.S. president who's been tweeting, who underscores basically that the wall is not negotiable effectively. Right, specifically, the most important way to stop gangs, drugs, human trafficking, and massive crime is at our southern border. We need border security, and as everyone knows, you can't have border security without a wall. The drones and technology are just bells and whistles. Safety for America. Peter, do I need to get prepared for a second half of Mr. Trump's term that's going to be a lot more unpredictable and a lot more difficult to see out?
Well, good morning, Yousef. I absolutely think so. I think the fun is just starting. He'll ratchet it up from here. There is no doubting that he has got one agenda, and that is to remain in power and get another 4 years. So I feel as though that the first 2 years were a little bit of a test case. Let's see how it runs. Now it's full, pedal to the metal. The Twitter and his stance is, I think, very much a part of his personality. Entrepreneurs seem to deal that way. Having dealt with many over the years, I feel as though he falls into that category very easily, and they don't take, backward steps. He's a different decision maker. He's like a Steve Jobs in many ways as far as, breakthroughs, and I'm not suggesting it as a comparison to him, but these sort of personalities are big picture thinkers.
Peter, it's good to see you this morning. Trump filled with the entrepreneurial spirit is certainly a charitable way of putting it. But speaking of the impact on the markets, Yousef brought up the unpredictability, something we've seen in recent months. Take a look at what happened when Trump first won office. We had that Trump trade, which, if you think about it, was the simultaneous upward movement in U.S. Treasury yields, the U.S. dollar, and U.S. equities. Is that firmly gone now? Are we now looking at the end of the Trump trade?
I think in a lot of ways you are. I mean, have a look at that US dollar index and what it hit at that peak of around about 103, then sunk to 88, 89 and back at 96, 97 now. So that just shows you that side of it. Then you look at what's happened with US equities. They've rallied incredibly hard over that 2-year period. It's been one-way traffic, and sure, since the last 2 odd months, they've had a fairly steep pullback. Crude oil as well, and then you're looking at that end of free money, the ratcheting up this year of 4 rate rises. How many are forecast for next year? So that's hitting him between the eyes a little bit to take a little bit of that sting out of it. And he's certainly one to realise from a business perspective how the economy is faring. And I look at Trump, and he's a very interesting character to observe, but I think that wholeheartedly he wants a strong America. He's got issues on every corner. He's put to bed in some ways North Korea, and it's going to be fascinating how he plays into the trade issues with China.
I mean, one of the issues he's facing is a Fed that might not be very supportive of him. Yes, there's a lot of criticism that he's even entertaining a thought of possibly dismissing the Fed governor. But again, you look at some of the other voices in the market, there are some who would agree with that view, given the policy action that has been taken. Some have been describing it as a policy mistake, like, of course, the folks at Bianco Research, who Bloomberg spoke with in Chicago. Do you agree with that view? Is the Fed committing a policy error here?
Well, it's hard to say, Yousef, if they're committing a policy error, but you have to say that they were unanimous in their decision-making the other day. So they're a collective board all talking together with the same mantra. So there's no one on the other side and saying, well, look, there's some for and some against. So I take on board, the Jerome Powell issue. I understand also from, past Fed chairs what they do, and they always have rhetoric coming from the president or issues at hand. This president's a little bit far more outspoken than you've seen Obama or certainly George Bush or the likes of Bill Clinton. So this is they're getting it between the eyes. He believes that he's got an agenda, and that is to push hard for this US economy. He doesn't want to see a pullback. He wants to see profitability. But also look at the unemployment numbers. I mean, in a lot of ways, the US is screaming ahead. GDP might come back next year, but we've nearly got full employment. We've got wage rises, and it's not a bad place to be. We're having a bit of a correction. I'm not sure whether 19 you're going to see a washout, but it's a hard one to forecast at the moment.
Right. So, Peter, let's try to connect these two issues, the markets and the economy. Is there a point at which that turmoil that we've seen in markets begins to affect the real economy? And if it doesn't, then why do we have this disconnect between what the markets are telling us and what the economic data is actually telling us?
First off, have a look at buybacks. This year has been outstanding, and dividends have been outstanding as well in the US. So that's not a bad thing, that's really a good thing. The second part of it is a lot of these IPOs are having they're having issues as far as attracting performance from these corporations that they've backed. So there might be a little bit of they may be, too heavily priced. The other side is that as the economy does take its foot off the throttle a little bit, or there just seems to be a pullback, it's not unusual in bull markets that you see these washouts and then you see a market take on board and have more momentum. Any market that's risen so heavily in the last probably 6 or 7 years, you need to look at it over a long-term horizon to also realise that there's been an enormous amount of value created, and it's sometimes that markets have a little bit of a wait and see, and they become exhausted to the upside. But overall, the US economy and the US, as far as the stock market has performed, have been outstanding investments over the last, 5 to 6 years.
Peter, we still have a lot to get through. Some strong views. Peter McGuire stays with us.
Peter McGuire, the CEO at XM Australia, is still with us. Peter, let's start with the big question. The stimulus measures that have been announced from China so far, are those going to be enough to offset the impact of a slowing economy and those ongoing trade tensions?
Well, first off, we've got to take on board what's happened this year. $3 trillion of wipeout in that 11.5 months for the Chinese equities. So that's a little bit of a wake-up call for everyone in mainland China. Secondly, what effect is these trade talks, or are we able to put something together as far as from the Trump administration and Beijing? Are they going to shake hands on a deal and put the whole matter to bed, or is it going to actually ramp up from here and create far greater volatility and turbulence to the market in the first half of next quarter? That's an unknown. The second part, of course, is what impact is China going to do as far as increasing spend, and as far as 5G, you're talking about manufacturing, internet, artificial intelligence and so on, to create that stimulus and also to make sure that the wheels don't fall off overall on that Chinese economy in the short to medium term.
Peter, the folks at Schroeder Investments, they basically say that they're short-term bullish on Chinese government bonds. We have a few other calls out from UBS and others on what the currency might do in 2019. How do you approach Chinese assets at the moment going into the new year?
I think it's Yousef, it's a very, very hard one to look at and not be a little fearful. When a market's down as heavily as it is, it certainly can get a support line, and you can say, well, righto, the heat's, all the downside and all the bad news has come out of the market. But I think if you see a continuation across Eurozone, if this matter to bed as far as Brexit, and you're talking about the French situation, and that rolls into, naturally, these trade talks and the sanctions and so on, then as far as what happens on the big picture, then where does the Chinese economy lay? And if you do see further softness in that first to second quarter of next year, I think that's going to put a lot of further fear in that Asian economy, that Asian area and all the Asian economies. And I feel as though that could really assist in dragging those other markets down quite considerably.
All right, Peter McGuire, CEO at XM Australia, thanks so much for being with us.